Aloha everyone, Joshua Hayes at bigwavetrading.com, and this video lesson might be a little longer than normal, basically due to what's happened in the market. Friday, wow, what a session. And what's crazy is that the volume yesterday on the SPY and the QQQ was extremely large. Look at it today. Massive, absolutely massive distribution, capitulatory selling, very, very ugly. And the most important thing to notice with these charts, this is your 500 EMA. The IWM broke it, rallied back to it, and is now completely rolled over. It kind of looks like a hammer today. Might. Capitulatory kind of selling happened in the IWM today, it looks like. But the DIA, hard crack. QQQ, hard crack. SPY, hard crack of my uptrending final line in the sand where I want to get long. Now, before I get to what I'm doing in my long-term accounts for everybody, I let everybody know, I tell you exactly what I'm doing. Every member of Big Wave Trading knows exactly what I'm buying, selling. I show them my books. I am a completely open and transparent individual. On the swing side, after today's session, I obviously don't have any new long positions, but for the first time, I do believe, since the initial COVID sell-off in 2020, I don't have any long positions on my books in the swing and positions account, and I don't have any orders outstanding. I had orders to get long CRK after this day, April the 2nd. No trigger, no fill, no losses, canceled after today's session. Yesterday, IAG gave me a great signal off the 50 SMA. Buy stop 655, limit offset 660, no trigger, no fill, no losses. After today's session, both of those orders are off the books. Coming into today, I had a long position in NVS. That completely ran all my stops. AXS, I had gains in AXS after today's session, hit my break-even stop, and I'm all out. And on an end-of-day basis, it is also a 100% sell signal. And then RSG, after the arrow is still there because it is not a 100% end-of-day sell signal yet and won't be until it closes below the 50 SMA. But my personal final stop was break-even after the gains and taking profits. Yesterday morning, this morning, and then it ran the rest of my trailing stops, break even on the final part. So with RSG, AXS, and NVS hitting all my trailing stops, that leaves me 100% cash in my swing and position accounts, and I have 3 of them, along with 0, since I canceled CRK and IAG today, 0 stocks on the books for buy stops for orders to trigger on the upside. There is only 1 stock I am watching on the swing side, and it's EXOD, and I gotta admit, I don't know much about it. But on this session here, I decided to not go long. It initially rallied 13% without me, and I felt stupid. Now it's consolidating. It is still on my watch list. There are no orders because there's been no pocket pivot point signals, which you'll see these blue lines off of any support level, but it still looks good. So EXOD is the only stock I am considering on the swing side. Not only that, at the end of this video lesson, I'll show you there are 0 stocks in my daily squeeze scan on Telechart version 25, and there are 0 stocks in my weekly squeeze scan on Telechart version 25. I can't remember the last time. Those scans have been optimized, so they're good to go now. But since making those scans, I haven't had a single session where both of those returned 0. And since 2020, I haven't had a single session where I have no long positions and nothing about to trigger. So very, very different situation going into this. And what I wanted to say on the swing side, which is most important, and members know this, and even if you watch my free YouTube video lessons, you will know that on each weekend video lesson I posted since this reversal day, I went from being 200% long in my swing accounts, or near 200% long, after this session, sub 100% long. And when this entire consolidation here and this attempted breakout to new highs could never get back to over 100% long. And at some point in here, I posted in the Discord and have reposted that post multiple times. I stated in February, if everyone is bullish, if everyone is long, and if everyone has bought stocks, who's left to buy? We have our answer. No one. I had no idea that the tariffs would escalate to what they have. I did not see this coming. And that being said, am I shorting stocks? I personally only actively short stocks when the SPY and the QQQ is below the 200 SMA on the weekly time frame. And if you're like, well, then it's too late. Was it too late in 2008 if you played it like that? I don't think I can go back to 2000. I'm going to have to truncate this chart. Let's go back to 2000. Was I too late if I followed that same methodology? For 2 straight years, SPY was under the 200 weekly SMA. Now, with that being said on the swing side, there's nothing going on there. So let's go up a time frame to my long-term side. I have told everybody that unless you're in a quantitative tightening market, which we are, but we're about to switch to a QE market. They've already pared that back to like 25 billion is allowed to run off the books to 5 billion. Soon it'll be 0. So we're going to go from a QT to QE market. We're currently in a rate cutting market. However, we'll have to see if stagflation takes hold. If it does, that might change. But when we are in a QE and a rate cut market environment, I want to buy the pullbacks. So during this pullback on March the 7th, I nibbled 10 stocks, including ETFs in my long-term portfolio. Yesterday, I took a bigger nibble in my long-term portfolios with multiple names, all posted to members in real time. Notified members I was doing it before I did it, posted the names that I bought afterwards. I did that in one account yesterday. I did it in another account near the close today. So I did it near the close yesterday. I did it near the close today. And I still have cash available for a reclaim of the 500 EMA. Now, if we roll over, I got to see a series of higher highs and higher lows before actively going to work. But you might be thinking, why are you even buying in your long-term portfolio now? That doesn't make any sense. The market's crashing. I buy panic and fear in the long-term portfolio. And if you don't understand how it works, I like to buy on the way down. If you did that, let's pretend you bought the exact tippy tip top in the year 2000 on the NASDAQ, and you've done nothing since. 20 years later, how much are you up? 281% still. If you bought on the way down, let's say you got lucky and bottom ticked it in 2002, you're up 1,900%. All short-term noise, did it matter? Absolutely not. So now let's go to 2007. Let's say you bought the exact tippy top in 2007. How much are you up on the QQQ after today? Around 700%. What if you were buying on the way down and you happened to get lucky, not really lucky, intelligent? You bought at the bottom also in 2008 along with that. How much are you up? 1,500%, give or take. So this is why in that long-term portfolio, I buy the SPY and the QQQ and names like Microsoft and Google. Let's check out Google. How did Google do since the 2007 tippy tip top? Still up 900%. If you added to it all the way down and you got some at the bottom, you're up 2,000%. Short-term swing position size, we're all cash. It's a day trade only kind of market. And by the way, small caps are hot. AREB today, as you will see, amazing. Absolutely amazing. And you'll see the arrow where it's set up. It's just incredible. So there's still that time frame that's working. You had Newsmax, you had ICCT, NMAX, all blistering higher. RSLS this week too. So there was plenty of upside intraday. But on the swing side, it's definitely risk off. But on the long-term side, I'm a buyer of panic and fear. And I think we finally started to see it today. That VIX spike that I've been looking for. Here's a spike. Here's a spike. We got it today. Now, there's nothing that can't say this can't go much higher. Do you guys remember back here? Of course you don't remember. 1987, you hit 170 on this VIX. It's only at 45 now. So it can always go higher, but at least there's a start there. Now, if we look at the VIX intraday, that's what you should see as the market sells off. But here's the issue that I have. The equity put call ratio hit a high of 2.36 today. That is absolute panic. But as the market sold off, it closed at 1.13, barely over 1, lower, it looks like on this chart. Stockcharts.com had 1.02 yesterday, so it's always different. So I kind of look at them both. So I'm going to check out stockcharts.com too. But the mere fact that it hit 2.36 at the open, this is a 15-minute chart, and kind of fell throughout the day, I just didn't see the panic in the options market. And at this point, I need to see panic everywhere. So it just isn't there. So on top of looking at this charts, I want to now switch it to a daily time frame to show you another thing that could have kept you safe during this entire sell-off. If we go back to the SPY, I want you to notice something. The SPY daily chart. Let's go ahead and see if we can't decrease this. Back in December, after that first crack, the tickets indicator a few sessions later rolled below the zero line. It has yet to even come close to recapturing the zero line. And remember, good things happen above the zero line, bad things happen below the zero line. Since that sell-off on December 18th, the tickets indicator hasn't even ticked above the zero line. If you only went long stocks or the market with this indicator above the zero line, you avoided the entire sell-off. The QQQ, the exact same thing. This one rolled over and went below the zero line. This one was a little bit later, but in January, it rolled below the zero line. When it tried to make new highs and actually did print new highs at 540.81, this indicator never got above the zero line. And since then, pure selling with panic selling today. Very, very ugly. So I just want to show you that the tickets indicator keeps you safe at the very least. Could you miss if you just waited for the zero line here and didn't understand the stair-step way that it works? Did you miss a lot of that rally attempt? You sure did. But once you got over the zero line, very nice moves, then got below the zero lines, you avoided all this chop, and it got you back in here. Wasn't smooth because we were near a top. We'll only know in hindsight. But when it's above the zero line, good things happen. When it's below the zero line, bad things can happen. It's been below the zero line the entire time since the start of the year, and with the SPY since basically the middle of December. So then that leads us to Telechart version 25. By the way, here's AREB. Breakout above the high of the day, consolidates at the high of the day, going into 12:30 p.m. Only a 134% gain, only, while the market sold off all day. But what I wanted to show you, zero stocks in the daily squeeze scan, zero stocks in the weekly squeeze scan. And then if we look at the weekly chart of the SPY, this is my ultimate buy level, 480. We're getting there. That's going to line up with this 200 EMA on the weekly time frame. That will erase all the gains from the breakout from the 2022 correction. That looks like a good level of support. But right now, the TTM trend momentum is strong to the downside. Triple red on this indicator. and we've come out of a proper squeeze setup, loose to medium to loose, and we're firing short. So it's going to be rough for a minute. QQQ, same setup. IWM, even worse setup. DIA, same setup. Triple red, TTM is red, and we're firing out of a squeeze lower. So this is going to take some time. So swing position side, hands off. It's all about the intraday setups like AREB. This is the time frame of focus. And then in the long-term portfolio, I will continue to buy near the close following any panic session, because in time, as I showed you, with a 5 to 20-year time horizon, which I have, my heart goes out to anybody that's about to retire and doesn't have their money with a firm that knows how to protect their capital during bear markets. This must be horrible for everyone, and my heart goes out to you. But if you have a 5 to 20-year time horizon, you shouldn't be selling. You should be buying. If you're not already in cash in your 401k, you should be adding the percent that you invest in your 401k, because in 5 to 20 years, you will definitely be higher in the overall market. All right, everyone, I'm going to wrap it up here. I hope you like the video lesson. Give it a thumbs up, comment, let me know how you're handling this market environment. And if you know anyone that could benefit from a methodology on multiple time frames like we run in big wave trading, feel free to share this video lesson. Have a great rest of your weekend, everyone.